The US stock market has reversed sharply downwards. All benchmark stock indexes closed in the red on Friday, having logged one of the steepest falls of the year. What exactly lies behind this nosedive? Wall Street responded in this way to the Fed's policy decisions. Last week, the US monetary authorities signaled an earlier-than-expected rate hike and the plan to scale back the QE program. At the same time, the US dollar sharply clicked into gear in light of the Fed's hawkish statements. Nevertheless, analysts reckon that the stock market is now making a large downward correction. Once it's over, the market will make a new attempt to hit the strongest levels of the year. The Dow Jones closed on Friday with the heaviest losses, having tumbled 1.6%. Likewise, the S&P 500 shed roughly 1.3% to close at 4,166 points. The index is expected to trade in the corridor of 4,120 to 4,200 in the near time. Importantly, let me remind you that the US economy is keeping healthy amid stimulus measures by the Federal Reserve, as well as successful mass vaccination and the pandemic decline in the country. The economic health is proven by growing demand for homes in the states with attractive property prices and high living standards. Remarkably, experts point out that more and more Americans are able to buy homes at a full settlement without getting a mortgage. The boom in the housing market is confirmed by the latest sales reports. Moreover, the construction sector lacks employees. Last week, the US dollar logged the sharpest growth since March this year for obvious reasons. Its index gained almost 2% for the week, having climbed to 92.20. The US currency benefited from the hawkish shift in the Fed's rhetoric. The prospects of an earlier-than-expected rate hike and scaling back stimulus measures enable higher yields of the dollar-denominated assets. The greenback is capable of extending its advance. Experts do not rule out a correctional decline towards the lower border of the corridor of 91.80 to 92.60. The USD CAD pair went steadily upwards last week in line with the expectations. The Canadian dollar failed to find support from growing oil prices. As we told you in the afternoon, oil prices are rising on Monday, despite a fall in global stock markets. The current situation looks like a full-fledged trend reversal of the Canadian dollar, which is likely to extend its weakness. Analysts advise traders to take notice of the strong resistance in the area of 1.2500 to 1.2590, where the price could retrace and consolidate. Currently, the USD CAD pair is trading at around 1.2470. It's expected to halt in the corridor of 1.2380 to 1.2550. Today, Bitcoin is trading lower. Its price slumped to $33,000 from $36,000. The number one cryptocurrency looking nosedive in light of the news from China. The authorities in the province of Xinjiang, where a lot of large crypto miners clustered, banned Bitcoin mining. 26 mining companies which operated officially are subjected to the crackdown. Nevertheless, we expect the flagship cryptocurrency to regain some losses. It's likely to trade in the corridor of $33,000 to $35,000 tomorrow. Perhaps macroeconomic data, which is due this week, will cheer up the US stock market. On Thursday, the economic calendar reminds us of durable goods orders and a weekly update on unemployment claims. On Friday, investors are anticipating data on US personal income and spending. The focal point of Friday will be a report on consumer inflation in the United States. Analysts have optimistic expectations because the pandemic is ebbing away amid the progress in the mass vaccination. Don't miss our video news on InstaForex TV channel.